Welcome to the Deep Dive. Today we're plunging into the global insurance agency software market. We've got some really fascinating data here from cognitive market research. We're talking sales revenue figures from 2021, projections for 2025, and then looking way out to 2033.
Yeah, a pretty long view.
Exactly. And our goal, to figure out where the growth is, what's really driving it, and spot some of those surprising fast movers. We won't name companies, but we'll definitely look at the types of players winning out.
Right. And I think what's really key here is that this isn't just about software numbers. It's like a window into this huge digital shift happening in the insurance world.
A massive industry.
Totally. And these figures, they give us clues about bigger economic trends, tech shifts. You get these sort of aha moments about how business is changing globally.
Absolutely. So let's kick things off with the big picture, the global view.
Okay.
In 2021, this market was already pretty substantial, just under $11 billion, 10,936.7 million to be precise.
Right. Not small change.
It's not at all. Fast forward to 2025, the projection is almost $15 billion, $14,703.8 million.
Okay. Solid growth.
But here's where it gets really impressive. By 2033, the forecast is over $26.5 billion, $26,577.2 million.
Wow.
That's more than double the 2021 figure. The global compound annual growth rate, the CAGR, is 7.68% over that whole period.
Nearly doubling in, 12 years? For a specialized software market, that's really significant.
It is.
It says a lot about how seriously the insurance industry is taking this digital transformation. It's not just dipping a toe in. This is sustained, heavy investment. They need this tech.
Yeah, it seems fundamental now.
Absolutely. It's about efficiency, customer experience, just staying competitive. It shows the future of insurance is, deeply tied to its software.
That global momentum really sets the stage. So let's break that down by region, starting with the powerhouse, North America. It really leads in terms of just sheer revenue.
Makes sense.
Yeah, the North American market. It's projected to go from over $3.3 billion back in 2021 to more than $8.6 billion by 2033. That's a CAGR of just over 8%, 8.067% specifically.
Still growing strongly then.
Very.
Yeah.
The U.S. and Canada make up most of that, obviously, both showing really stable, strong growth. The U.S. CAGR is 7.93%. Canada is slightly higher at 8.2%. For markets that big, that's steady modernization, right?
Definitely shows continued investment.
You know what really jumps out in North America? It's Mexico.
Oh.
Yeah, its projected growth rate is actually higher than the U.S. or Canada, an impressive 8.459% CAGR, going from about $676 million to over $1.8 billion.
Huh. That is interesting. What do you think is driving that specific acceleration in Mexico?
Well, that's the question, isn't it?
Right, and it really highlights that there's nuance here beyond just the big market numbers. Mexico's growth. It suggests maybe they're leapfrogging some older tech.
Could be.
Maybe driven by a growing middle class getting insurance for the first time, often through digital channels. It might be less about upgrading old systems and more about building new digital-first structures.
A real structural shift, yeah. Okay, so from North America, let's hop across the Atlantic. Europe. How are its diverse economies handling this software shift? Well, Europe's also looking very healthy, expected to nearly triple. From about $2.9 billion in 2021 to almost $7.5 billion by 2033. The KDJR is pretty much neck and neck with North America, 8.068%.
So very similar overall growth trajectory.
Very similar. And we see strong, consistent growth in the big players, UK, Germany, France, Italy. They're generally in that high 7% to mid 8% CGR range.
Yeah.
France actually stands out a bit among the larger ones at 8.451%.
Okay, solid across the board.
But then, just like with Mexico, you see some really interesting outliers in the smaller European markets. Denmark, for instance, forecast to be the fastest grower in Europe, 8.483% CGR.
Wow, Denmark leading the pack.
Right. And Switzerland's strong, too, 8.381%. Sweden's up there, 8.231%.
Yeah.
When you see that range in Europe, the big steady growers and then these nimble, faster ones like Denmark, what do you think separates them? Is it regulation, tech infrastructure?
That's a great point. I think with Denmark, for example, it points to maybe a combination of factors. It's not just market size. It could be, regulations that actively encourage digital uptake.
Right.
Plus, a tech-savvy population, maybe a greater readiness to jump straight to cloud solutions. Sometimes these smaller, agile economies can pivot faster than bigger ones with more established legacy systems.
That's a nerve joke.
Exactly. Leads to a quicker, more widespread shift in how agencies operate.
Okay, fascinating. Let's shift our focus now to the emerging markets, starting with the vast Asia-Pacific region.
Okay, APAC.
Here, the market was over $2 billion back in 2021, projected to more than double to nearly $4.7 billion by 2033. The TGR is 7.402%.
So slightly lower CAGR than Europe or North America, but still strong.
Right. Slightly lower percentage-wise, but the scale of the absolute growth, especially when you look at China and India, is just immense.
Huge volume.
Exactly. China's expected to hit over $1 billion itself. And India actually shows a particularly strong individual growth rate, 7.782% CAGR. It's really contributing a lot to those regional numbers.
Yeah, the dynamics in APAC are really compelling because of that scale. India's growth there with that higher individual CAGR, it really underlines the rapid digital adoption happening.
Driven by what population?
Yeah, a massive, increasingly online population, growing disposable income. For software companies looking to expand, the sheer number of new potential users is, well, enormous, even if the adoption per person isn't as high as in mature markets yet.
A massive opportunity, yeah. Okay, next up, South America. This market was just over $832 million in 2021. Projected to reach over $1.9 billion by 2033. That's a CAGR of 7.255%.
Okay, solid, steady growth.
Yeah, pretty consistent across the key countries. Brazil, Argentina, Colombia, Peru, Chile. They're mostly tracking around that 7% mark. So what does this steady, solid expansion tell us about the region?
Well, it shows a clear move towards digitalization, even if it's maybe not quite as explosive as some other areas we've seen.
Right.
The individual country KJARs might be a bit lower than the global average, but the overall trend is definitely towards adopting modern software. It suggests there's still significant untapped potential there, as more people get access to insurance and as the digital infrastructure keeps improving.
Room to grow, definitely. Okay, let's turn to the Middle East now.
Right.
This region was about $234 million in 2021. By 2033, it's projected to more than double, nearly $580 million. And the CAGR is robust, 7.804%.
Pretty strong number for the region.
It is, and we're seeing some really notable country growth here. Turkey's CAGR is 8.133%. The UAE is at 8.066%.
Okay.
But Egypt is a real standout, going from about $16.7 million to over $44 million. That's an 8.219% CAGR.
Wow, Egypt's really accelerating then.
Yeah. And Qatar's strong too, 8.129%.
Yeah.
So what's pushing these consistently high KGRs across the Middle East?
I think it clearly reflects that strong digital push we hear about in the region.
National initiatives and things.
Exactly. Countries like Egypt and Turkey showing that kind of growth. It points to rapid adoption of these software solutions, often as part of broader government digitalization strategies. They're actively investing in tech integration for core industries. And insurance is, well, a prime candidate for those efficiency gains software brings.
Makes sense. Okay, finally, let's round out our regional tour with Africa.
Sure.
The African market was nearly $1.6 billion in 2021, projected to hit over $3.2 billion by 2033. The growth rate here, the CAGR, is 6.496%.
Okay, so a bit lower than the other regions overall.
A bit lower, yes. Countries like Nigeria and South Africa are big contributors to the total volume, showing solid growth, even if their individual KGRs are around 6% or slightly higher for South Africa at 6.756%.
Yeah, and I think what's important to remember with Africa is even if the overall CAGR seems a bit lower, it still represents really substantial absolute growth in dollar terms.
Good point.
The market faces unique challenges, sure, infrastructure, access, but also huge opportunities to kind of leapfrog older tech straight to digital. So that rate, even at 6.5%, signals significant expansion and investment in the continent's insurance infrastructure. Lots of long-term potential.
So putting all these pieces together, what's the big takeaway?
Well,
the main theme seems crystal clear. Significant global growth for insurance agency software.
Yeah.
Everywhere.
Undeniably.
And it feels like there's this dual engine driving it, right?
Uh-huh.
You've got the massive sustained revenues coming from mature markets, North America, Western Europe. They just keep modernizing.
Right, the volume drivers.
And then you've got this explosive percentage growth, this rapid adoption happening in emerging markets across APAC, South America, and especially, it seems, parts of the Middle East.
That's it, exactly. The core takeaway has to be that the digitalization, the automation of insurance, It's truly a global thing now.
No longer just a Western phenomenon.
Not at all. It's happening everywhere, just, at different speeds, maybe for slightly different reasons. And what's so fascinating is seeing emerging markets like Mexico, Denmark, Egypt posting the absolute fastest growth rates.
Yeah.
That signals really rapid new adoption, or that leapfrogging we talked about. Meanwhile, the established players, the US, Canada, Western Europe, they keep driving the biggest dollar amounts through ongoing upgrades.
Right.
The whole picture, it really makes you ask, what is driving those regional differences in speed? Is it mostly regulation? Is it changing consumer expectations? Or maybe even, the local tech talent pushing things forward?
It's a huge shift. I mean, going from over $10 billion in 2021 to a projection of over $26 billion by 2033, it's impressive. It really makes you think about the wider impact, not just for insurance pros, but for all of us interacting with these services.
And connecting it right back to you, the listener. What could this speed up in software adoption mean for, say, the human insurance agent you might interact with in the next 10 years? And how might this tech reshape the whole experience of insurance for you? Buying a policy, making a claim will it become faster, easier, maybe a lot more automated, something to think about?